Hello, everyone, and thank you for tuning in to our market alert video for today, which is October 11, 2024. And we're going to talk in this episode about the inflation numbers that we got, which, according to Bloomberg, surprised just about every economist out there. But you guys who have been watching this video knew that inflation was going to go up because we told you 2 weeks ago that it would. And in fact, sometimes we think that maybe these economists and the Federal Reserve should subscribe to our Market Alert video. Maybe it might help them. Just a thought. So anyway, before we get going, I just want to tell you who I am. I am Ken Moraif. I'm the founder and CEO of Retirement Planners of America. And we are a firm that specializes in, I think, one of the most wonderful things, and that is the creation of SCWPS. And if you don't know what SCWPS is, well, SCWPS is the acronym for Second Childhood Without Parental Supervision. So when a client of ours retires, we call him a SCWPR, and we tell him to get out of here, stop bothering me, go play, have fun, enjoy, get it, just, beat it, and let us worry about all this boring financial stuff for you. Our website is rpoa.com. Please check us out. So I want to share with you how the inflation numbers are calculated and why we think that not only inflation was going to be higher this time than last time, and accurately so, it now is, but also why we think inflation over the next 3 months is going to continue to go up and actually might get to 3%. And remember, the Fed wants to get it down to 2%. So it's heading in the wrong direction. And they lowered interest rates to boot. Ay. So let me share my screen with you and we'll put some math to it. And by the way, there's going to be a lot of numbers here, but don't be intimidated. I'm going to walk you through it and you're going to be an expert when I'm done. All right, so hang in there. All right, so this chart right here, if we go over here into this column, this is the date, okay? So this shows you the monthly dates going back to September of last year. This right here is the CPI level, okay? And that is basically, CPI is the Consumer Price Index. It's the level of inflation, and it includes everything that we spend money on, except for some seasonal things. This right here is the change from month to month of that CPI level. This is that month to month. If you annualize it, you multiply it by 12. And then this is comparing last year to this year after all the dust settles. So let me explain to you how they go about, where these numbers come from so that you can impress your friends at the next cocktail party that you know so much about how inflation is calculated. Okay, so first of all, in August of this year, inflation right here was 314.8. They just announced that for September, and by the way, they announced inflation in October this month for last month, right? So they told us this month what the inflation was for September. So September's inflation was 315.3. So from August to September, that was a 0.16% change. Okay. Now you take that 0.16%, multiply it by 12, gives you 1.9. Well, 1.9 is a bigger annualized rate of increase than it was in August. So this is where inflation went up. Okay. So this is why we thought it's going to be very difficult for inflation to go down. In fact, we thought it would go up. The headline number is 2.4. Okay. And I'll explain where that number comes from also here in just a sec. All right. So let's go back to last year. And last year, with the same math, the difference between August and September of last year was that inflation went up by 0.25%. This year, it went up by 0.16%. So that's actually less than it did last year, right? Last year it went up by 0.25%. This year it went up by less than that. And that's why the headline inflation number went down here to 2.4. Now, let's forecast. Let's look into the future, and let's assume for a moment that inflation doesn't go up or down for the next 3 months. All right, it stays at 0 for the next 3 months. Here's the problem. If you look over here, you can see what happened in the last 3 months of 2023. We had negative inflation. Inflation actually went down, not up, or stayed the same as I'm illustrating right here. So if inflation went down last year and it doesn't this year, then if you think about it, it means inflation's higher this year than last year. I know it sounds crazy to think that way, but that's how they do it. And so if this is 0 and last year was a 0.04, well, minus, then guess what? Inflation goes up to 2.5. And then if we have another 0, we're comparing it to a minus 20, where inflation went down, but this year it didn't. So therefore, it's an up. And that's gets us to 2.7. And then we had a minus zero point 0.1 versus another zero, and that would be 2.8. So we're approximating 3%. Now, look what happens if inflation just stays as it was this month or September for the rest of the year. Then we have a plus 0.16 versus these numbers here, and inflation then goes up to 3.3%. Now, let me show you a chart to illustrate a little, maybe visually for you visuals out there, what this all looks like. Okay, so what you can see here is we peaked at inflation in June of 22. 9% was the rate of annualized inflation rate year on year. That was very, very bad. It came all the way down to 3. It's been trending around there. And now here it is, this red line. And we think it's going to trend back up and maybe get over 3% by the year end. So, and here, this is an environment where the Federal Reserve just dropped interest rates. You drop interest rates, it makes inflation go up. So that's why we said we think the Fed panicked. They saw some numbers for, 2 or 3, 4 months, and they freaked out and they thought, oh my gosh, we got to lower interest rates. But now, guess what? Inflation's going back up. And these storms, these tragic storms that we've had are not going to help because, supply lines and all the rest of it are being disrupted. Cost of stuff's going to go up. And then we've got the jobs numbers, which were way higher than people expected. And you have that to add to the mix. So we wouldn't be surprised to see inflation at 3% before the year end. And the Federal Reserve should have watched our videos to know that we said inflation was going to go up and they didn't need to lower interest rates that much. So what do we do about it? More importantly, in our neck of the woods as investors and retirement planners, what do we do? Well, if you didn't watch the video that we did for you, I'm going to guess about 4 weeks ago, where I had Jordan Roach, our investment oversight committee director, on, we talked about what has happened in the last 10 election cycles. And 8 of the last 10, it's a very interesting video. I encourage you to go watch it. It's on our website, rpoa.com. And in 8 of the last 10 elections, we've had a big drop in the market, a 10% or more drop in the market. And but the good news is it recovered quickly after that. So it's not anything that caused any major upheavals. 2008 was different, but that was a credit crisis. And so we are anticipating that with the storms, with the war in the Middle East, with the elections coming up, and with inflation going up and the Federal Reserve lowering interest rates when maybe they shouldn't have, now we have a brew for potentially a correction, which is the market going down, about 10%. So we're prepared for that. We're expecting it. It may not happen, but that's what we're looking for. Now, if it does, we're seeing that as a buying opportunity, not a reason to freak out and get out and sell everything. All right. So we think it'll bounce back quickly from it if it does happen. And it should represent an opportunity to put cash to work if you have any, and to take advantage of it. Now, one of the things that I want to reiterate, and I do this every video because it's true, and that is, even though we've been remarkably accurate over the last many years, last decade or so, we don't have a crystal ball. And so we could be wrong. And that's why we always believe, especially if you're over 50 and you're retired or retiring soon, that you should have a strategy to protect on the downside. We believe one of the biggest risks that you face is a big loss within the 5 years that you're going to retire, or the first 5 years of your retirement. That decade, we think, is crucial to the success of your retirement plan. And protecting principal during that period is very, very important. Many studies have shown that. So having a strategy to protect yourself is, in our view, paramount. And so we're painting a rosy picture here, but that doesn't mean bad things can't happen. And they could happen suddenly. And as we've seen with these storms, the damage gets done very quickly, and the recovery from it takes years. It's terrible once it happens. And that's the same thing with financial storms. So, our strategy said to sell in November of 2007, before the stock market crash of 2008. And when the market bottomed in 2008, it took all the way to 2013 to get back to even. It took about 5-6 years, actually, to get back to even. So, if you're retired or you want to retire and that happens to you, a 57% drop in the market, that could impair your plans. So we believe it is very important to have that strategy. Our strategy also told us to sell literally the day before the pandemic was announced. That was our strategy said that. We're not clairvoyant or we have some magic crystal ball. but our strategy told us it was time to get out. So if you don't have a strategy, check us out, visit with us. Certainly have one for yourself if you don't. Um, we think, therefore, that for the rest of this year, inflation will go up, won't be taken well by the markets potentially. Certainly bonds may not like it. The elections will cause volatility, the war, those things, buying opportunity if we get a correction. And overall, though, we think we're going to be okay, but have a plan to protect in case we're not. So that's your Market Alert video for today. And as I said before, I hope it finds you healthy, wealthy, and wise. I hope you subscribe. Please subscribe to this. You don't ever want to miss a show. Oh, and make sure you listen to our podcast. We also have a podcast, over 300,000 near 300,000 downloads last year, over the last 12 months. Terrific. So make sure you do that too. And we'll talk soon.